Hello there, and thank you for joining me again this week. I'm Windermere Real Estate's Chief Economist, Matthew Gardner. And this week we're going to look at the US job market. You see, on the first Friday of the month, us economists get our hands on the latest US employment report. And the October numbers are out, and there's a lot worth discussing. So let's get straight to the figures. The country added 638,000 jobs in October, and although some would say that this was a mediocre number, it was actually well above consensus forecasts, which anticipated just 530,000 jobs returning. And it also came in above my forecast for 600,000 jobs. You see, 638,000 was actually surprisingly strong. And why do I say that? Well, coronavirus cases are on the increase again, and it would just be natural to assume that this would impact the number of jobs returning. But before we get all too carried away with the decent numbers, or supposedly so, let's look at it in a slightly different way. And as you can see here, the country added 22.1 million jobs between the fall of 2010 and February of this year. Now, when the pandemic hit, we lost almost the same number. 22.2 million jobs evaporated. But what was actually quite remarkable is that we lost almost 10 years of job gains in just 2 short months. And although jobs started to return in May, well, we're still down by a little over 10 million from where we were back in February of this year. And you'll also see the pace of improvement, well, that has certainly started to slow. Looking now at where jobs were added, the biggest gains came in what was the hardest hit sector during the pandemic, leisure and hospitality, with 271,000 jobs returning. But hotels are still suffering. You see, of that total, bars and restaurants, well, they saw 192,000 jobs return. But the country only added 79,000 jobs in hotels. Now, it's also worthwhile mentioning that the total gain, well, it would have been higher across the board, but look at government employment. You see, it dropped by 268,000. That number was actually inflated because of the loss of 147,000 census workers. Now, you'll also see that professional business services rose 208,000, retail up by 104,000. And that was mostly in electronics and appliance stores. Apparently, we still appear to be on a buying spree right now. 31,000 jobs added in that subsector. Construction also reported healthy gains, very important for all of us here, up 84,000. Manufacturing, 83,000, but that sector, it remains well below the pre-pandemic level. Now, I'd also add that private companies added a decent 906,000 workers, up 14,000 from September. So the contraction in government jobs that I mentioned earlier, that certainly impacted the overall growth numbers. So far, numbers could have been worse, but there was some data that wasn't as pleasing, and it concerns furloughed and permanently laid off workers. Now, you can see that the number of furloughed or temporarily laid off workers dropping, but it still came in at 3.2 million. That is down from 18 million back in April. That's better, but it is still elevated. But what you can also see is that the number of permanent layoffs, well, that continues to rise. Number 3.7 million. That is down 100,000 month over month, but the trend unfortunately is still headed higher. Now, you see, this is very worrying, and it gives me another reason to believe that a full recovery in jobs, it's still a long way away. Of course, 1.4 million fewer furloughed workers, well, that allowed the unemployment rate to drop, and it dropped a lot, breaking back below 7%, and now a full percentage point lower than we saw in September. Again, this was also well below economists' forecasts. Most of us called for it to come in at around 7.7%. Additionally, the broader U6 rate, that looks at people out of work but who aren't actively looking for a job, well, that pulled back as well, from 12.8 to 12.1%. Now, of course, good to see the unemployment rate drop, but again, it wasn't all good news. You see, the number of people out of work for more than 6 months, well, that surged by 1.2 million. Today, well, roughly a third of all unemployed persons have been out of work for at least 6 months. And the October rate, Well, it's quickly approaching the peak we saw during the aftermath of the Great Recession, when roughly 45% of unemployed workers had been out of work for more than half a year. This is also an important metric for economists to look at, you see, because workers who remain out of a job for this long, well, they enter a financially precarious period. Unfortunately, a contested election, well, that does one thing, and it reduces the chances of another stimulus package coming at least by the end of this year. Now, even if we do see more fiscal stimulus, and I think that we will, unfortunately it's likely to be far smaller than we really need. That's going to be a problem for the long-term unemployed. As I mentioned earlier, even though private payrolls rose decent, 906,000, the labour market, well, the recovery still has a long way to go. The number of people working in America today, well, it's back at a level we last saw in late 2015. And if we look at growth at the October pace, well, it would still take around 16 months for employment to get back to where we were in February. Now, I still expect we will see a slow return to work. But the numbers, well, I think they're likely to remain somewhat muted. And that will be the case at least until we get a vaccine or an inoculation, likely, hopefully, early this spring. Now, it's important to get it, obviously, but what's more important is, will we feel comfortable taking it? Time will tell. I will tell you one thing, I will take it the day that Dr. Fauci takes it. Anyway, the bottom line is that the report could have been worse, but it could also have been better as well. And with that, as always, if you've got any questions about my comments today, I would love to hear from you. But in the meantime, take care out there, and I look forward to seeing all of you again in a couple of weeks. Bye now.